Good morning, Sense of Things. It's Jeff and Ron here again for another update of what's going on in the markets, the world, and all the other craziness that's out there. Good morning, Ron. How you doing?
Good morning, Jeff. We got some fun stuff for you today. You let me know when you want to jump right on in.
Well, let's just kick it off. Might as well,
All right, let
might
me
as well
know.
get into some fun.
Yeah. All right, here we go. So again, might as well. I only got two slides this time, but two good ones. Worst decisions in business history. Western Union turning their back on the tech of the century, the telephone.
Yeah,
If people want to pause, they could read all this. I'm not going to do it. But you know what? When I saw this, it just reminded me of what we were going through before about Kodak and whatever.
yeah,
Like they're so resistant to change because they don't want to kill the gravy train,
that's
right?
exactly it.
What did Western Union do back in the day? Telegraph, right?
Mhm.
Delivery of messages. Well, my God, if we do the telephone, well, what's going to happen to our main business?
Yep.
So same thing, Blockbuster and streaming and all the other
Mhm.
good stuff. So I
Yeah.
thought that this was a good one.
Well, and it's the challenge of the dividend paying company that, okay, do
For
you
new tech.
stop paying dividends and, you know, invest in new technology, or do you just keep doing the same thing you've been doing? And a lot of these companies keep doing the same thing until there's no use for them anymore.
Here, think about it. I mean, it's been a multi-billion dollar industry for 50, 60 years. He tried to sell it for $100,000 at the time.
It's
And it's
hilarious.
funny, I've seen some documentaries on him.
Yeah.
I don't remember this ever being a part of any of those documentaries. And
Yeah.
this is a very interesting, cool point. I thought it would be cool. All right. The other one, CBS and NBC not wanting to do Monday Night Football 55 years ago.
It's
Yeah.
amazing.
They didn't want to ruin the gravy train. Hey,
Yeah.
we got a strong Monday lineup. Football? Who's going to want to watch
Who
football
wants to
Monday?
watch football
We got
twice a
Archie
week?
Bunker.
Yeah, because they watch it on Sunday. Why would they want to watch it on Mondays too? Now it's like every night football. Good Lord. I think there's, because I see on Amazon they have it and everything else. It's like nonstop football.
The other interesting part to this, and this makes sense, NBC and CBS had been around a lot longer than ABC. So
Mm-hmm.
they were more established. ABC really didn't have programming,
Yep.
right? So, of course, they wanted to pitch Monday Night Football to the other two. They had been established. But
Mm.
ABC's like, hey, we don't have a strong lineup. Let's give it a shot.
What the hell? What's the worst that can happen? It's one of those things. It's
Our
like, what's
ratings
the
aren't going to
worst?
get worse.
Yeah. What's the worst that can happen? Okay, it doesn't work and we move on to something else. This just some of the dumbest business decisions in history are people just not willing to take a risk or try something a little bit different. I mean, it's interesting to me. I've watched some of the spring football, the UFL. It's actually really good because these are people that really care about
Hey,
they're
they're buying,
getting their
they're trying to get
chance.
to the next level.
Yeah, they're getting and they're some of them it's going to be their only chance to play professional football, but they play hard and it's fun to watch, and Fox's coverage is great because they've literally got cameras everywhere and on the players and everything else. So you just see a different part of the game than you see on the NFL games at this point.
100%. All right, let's jump into some more dumbassery. So the Fed, I got to tell you, I'm giving CNBC all the props. I was in the airport yesterday and had a couple minutes. I'm thumbing through some news stories because the Fed had the announcement, and I had my hand in my head, and I'm just like, this is crazy because I believe that the report comes out 2 o'clock Eastern time,
Mhm.
but the journalists get a copy of this 10 minutes before, and they're not allowed to share it with
Okay.
anybody, right? They can't text somebody, hey, by the way, you know. But here's interesting, and CNBC did this. Look, this was the statement from the Fed, and I wanted to make sure I got the whole thing including. So basically, the black is the same language from the March statement. The red underlined is what's new. The red is what was taken out. 60 to 70% of this is the same.
It's amazing.
And meanwhile, people are waiting with bated breath for this. Did they change a word? How did he say it? What was the inflection? Did he have his eyes up? Did he have his eyes down?
He
What
bring
do
his
we
brief
mean?
remember in the days of Greenspan, did he bring his briefcase in with him to the
No. It's
testimony.
which hand he brought it in.
Oh, that's right.
If
Yeah,
it
if
was
it
on
was to
his
the
left
left
hand,
or
it
the
went
right
up.
hand.
If it was on his right hand, it went down. He caught wind of it, so he let his assistant carry in the briefcase the next meeting.
Yeah,
This isn't new, folks. This is going back 30, 40 years. This is
hilarious.
crazy.
If you've ever seen the movie, was it Rat Race, where it's like out in Las Vegas and all these guys are like betting on everything. It's the same thing. Oh yeah, he's gonna step and trip over that thing right there. Yeah, okay. Who's gonna give me $50 on that? Yeah, it's just the same idiotic stuff.
And then, of course, we talked about in our last episode the more idiotic reporters that are in the room asking him questions they know they're not going to get an answer to. So, is that because they can't think of an intelligent question, or they know what the answer is? They know they're not going to get a real answer, but that's what they're going to write about. Who are the
They
freaking
may trip him
editors that
up
are their
though. I mean, that's
bosses telling them that they ask these questions?
yeah. They might trip him up. He might just say something, and
Oh, no, it's not going to happen. I don't look. I paid attention to the last three in the current Fed speaker. It's all the same BS.
yeah,
It's all the same BS. Greenspan spoke in tongues. You
yes.
know, he. I think he made up words, and the other ones were just political figures. That's all they were. All right, couple of things. So just a couple other quick slides on profit margins by sector. And I thought this was interesting. Real estate shocked me here
Yeah.
because
Wow.
with where interest rates are in 30-year fixed vacillating between 5.25 and 5 and I'm sorry, 7.25 and 7.5. Infotech doesn't surprise me. Communication services and infotech are very overlapping. Financials, that makes sense, right? Because there's
Mhm.
higher interest rates. They got higher net
Yeah.
profit, net interest
But
margin.
interestingly enough, not much of a change from 24 or 23 to 24 there in financials, which I mean, I guess the interest rates went up and they've just been stable and steady. So it's easy for a financial company to predict that.
But I'm going to tell you what shocked me. Consumer
Consumers.
staples.
Yeah.
With inflation, prices going up, you would have thought that might have been margin expansion.
Mhm.
I would have bet on it if somebody said, you want to bet $1? I'm like, yeah, of course.
Yeah.
The margins are higher.
The other one, it's shocking to me, is healthcare there too.
Yep,
But I guess,
that was my second one. I agree.
yeah, I guess I understand that a little bit because a lot of that pricing is
It
controlled by
shrunk.
Medicare.
The margin shrunk from a year
Yeah.
ago.
Yeah. But a lot of that is controlled by Medicare. I mean, they have some control, but they don't necessarily have control over it.
No. And
But
then,
even consumer discretionary is really not that much different from the consumer staples. They're just
yeah, so this is basically year over year for quarter over quarter.
Got it.
Then you look at the 5-year average.
Hmm.
Hasn't been much better. It's almost a very similar
It's
setup here
basically the same
across
thing.
the
Yeah.
board.
Yeah.
So,
Amazing to me.
what do we infer from this? What do we take from this? How do we invest with this?
Mm-hmm.
I'm telling you, this real estate number just keeps shocking the hell out of me. But the infotech, no, obviously, as long as interest rates are going to stay high, financials are going to be above the curve because you can see that Q1 24 is higher than the 5-year average. But healthcare,
Mm-hmm.
meanwhile, we're still paying a fortune for medicine. I had a doctor appointment this past week. Look, there's no shortage of sick people.
Mm-mm.
So again, look at that 5-year average compared to where it is Q1.
Yeah.
And healthcare, remember, we were talked about this as far as it was depressed last year. It should have a good bump up this year. Not
Mm-hmm.
if these profit margins are going to stay the same.
No, not at all. Yeah. I mean, that the thing we went through, what, about 3 or 4 shows back, where you had that kind of interesting look at, where healthcare falls during the year, typically is in the back half
Yeah,
of the
starting in
year.
April.
Yeah. Is that going to happen this year? The other piece is, historically, April has almost always been a positive month, and April was a freaking nightmare this month or this year. So
First time they said, I forgot how it was with the margins, 1936,
yeah.
that we had a big first quarter of more than X% higher and a
Mm,
down April. First
yeah.
time in basically almost 90 years.
Yeah. Unbelievable. Yeah. Like I said, I
But
mean,
we're getting all these strange market anomalies.
yeah, but I think we also had the anomaly from October to February of the market just being on fire. And we were saying all along, it's got it. Sometimes it's going to have to correct. when it corrected, but it was not really that big of a correction in
Now, they
comparison.
kept drinking from the punch hole and hooked up with the IV too.
But yeah,
Anyway,
it's shocking
that's
to
what
me
I got until next week. But this is all important stuff to just keep going into the information funnel.
yeah. And like I said, real estate, I look at it from a REIT standpoint. Until we start seeing interest rates coming back down, they can hold their margins up, but typically it's that trade-off between, okay, I can get 5% on a treasury or I can make 4% on a REIT. Why would I take the risk? I mean,
Or why would you go into a 5% CD versus a 5.2% treasury? You're only going to pay federal income tax on a treasury, and the interest income you're going to get on the CD is at full ordinary tax rates.
ordinary
A
tax
lot of people don't
rates.
do this because the banks dangle that carrot, and the average person there doesn't
Yeah.
understand. It's not how much you make, it's how much you keep.
But the other
You pay
side of
more
the
in
coin
taxes
is
on the
I could
interest
still,
income.
yeah, still through a mutual fund company, I can still get close to 5 on a money market, and it's instant money. I mean, a treasury is too. I can basically sell it immediately, but
Risk
I
free.
mean, it's risk free pretty much on a money market at this point. If I have a government money market, I can get in and out as I need to. So why would I lock it up into something for 5 years at this point when I could just keep it in cash until that starts to go down?
I agree. I agree.
Cool. All right, folks, we do these for you. We're trying to get them a little shorter so that you can consume them faster. Hopefully, this is to your liking. Let us know. Give us a comment down in the comments section. And in addition to that, let us make sure that you subscribe to the channel. Make sure you give us an upvote on this because it lets us know that you're out there. And we appreciate you guys, and we'll see you back here the very next time.